Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. My man, how are you?
Good. Approaching the end of the week.
Another day the market goes up.
Another battle. Yeah.
What's new? Yeah, I mean, this market is incredibly strong. There's incredibly strong. There's you look at Apple, the big names, Apple, the Microsoft, even Tesla's up 2%.
Mm-hmm.
But yeah, I think that I don't know. I have the risk reward at 410. 410 is where we looked at it, and we're almost there. So we're going to see what happens. We're going to see how that plays out. If we don't get, you got to give it like 24 hours, 48 hours. But if we don't get anything, call it 409 to 411. If we don't get this pullback and it kind of just stays there, man, the next leg could be like another rip in your face up. So you got to be aware of that. And we'll have to rethink the framing right after that. So that's our top right here. We're going to be leaning against that just in general. We have some puts. Again, the market's up 2-3 points. Call it 2 points from where we got those put spreads. If it gets to 410, 411, you don't need me to kind of, that I'm going to be thinking about, like, we got to move these things up. We got to, we're trying to remember the whole game is about as longs go up, the market's going up and down, right? Up and down. So as longs go up, if we can shift out our bottom, sort of level, our puts, our hedge level, up a little bit, that's always a good thing. Even if you're spending a little bit of money because you're trying to make the money on the longs and you're moving the hedges. And I'm actively looking for shorts. I mean, I think I see one today, which is, I always want a short, but I'm a little concerned. So we'll start with a couple of the UOA, and we'll see a couple of themes that we've been looking at. But then I want to look specifically, again, a lot of people they always ask about the ideas, and they always ask, how do you start thinking about the ideas? How do you develop the ideas? The story, right? Because there's 3 parts. We're looking at UOA, we're looking at the technical analysis individually, and then we're looking at the story. And that's really where I want to dig in a little bit. I've been doing it over the course of the week. I want to go a little bit further today to show people how to think for yourself, right? The whole point about the Winning Picks podcast is, how do you think for yourself, right? Forget about if Felix isn't here next week, how do you think for yourself? How do you do it? How do you go about it, and what's your process and what you're thinking about? So we'll go through one again, just another small little step in the pieces of the puzzle. But let's go through right to one of our favorite names we've been talking about, AAL.
Sounds good. Before we get into that, everybody, to show our appreciation to Felix and for him helping us out, please like the video. It really helps us out a lot with YouTube and everything and reaching more people.
Definitely, I would appreciate that. All right, so let's look at AAL. So AAL here, we have earnings coming up. Stock was strong over the last weeks, call it. But let's frame it out first, because we have a little bit of volume. But I want you to see a little bit of the same old that we're seeing in these reopening names. So maybe they're a little bit tired. We have I'm just put this together. Sorry. All right, so AAL. All right, so we know the frame here, right? We know what we've been looking at. Real quick, just put it back together. Let's just go over here. So this looks like right around here. You got this level here. We got another level right around here. And this gets a little wonky up here, but we got this here. So we know that it's around $30. I think $29, $30. We've been saying back to normal. They were selling calls here. They've been selling calls throughout here. Again, they bought a little bit here. We saw, but it looked like there was a buy. In the last day or two, there was a buy of calls, but it looked like a buy and a sell of stock because the stock was under pressure. So when you see a lot of calls being bought and stock under pressure, you got to. That's almost a signal saying, it's possibly that they're buying these things and selling some stock on the way out just to have. So today we see the stock traded down decent amount today, and we are seeing, what are we seeing here? The April 30th, you get earnings, and we're seeing 5,000 puts here. 5,000 puts. Looks like they were bought here. Okay, reaching over here 57 vol when the vol was 53 coming in. So 74 cents, 75 cents, 72, 74, 75, 96. So this was a put buyer. Stock traded off and then immediately came back up. So there does look like some strength there, but someone is setting up for earnings, and it looks pretty clear since they came for this week, which is right around where earnings are supposed to be. Okay, so that's as clear as you get, where they're focusing specifically on earnings. We can look here in May, and you're going to get a little bit of more of the same. I think this is selling, and this is sort of reshuffling. So we've been seeing call selling at these prices at around 23 to 25. They're still coming in, and now they're coming in with puts. Again, the reopening trade has had a lot of legs over the course of the last 6 months. But again, this is normal. And we talked about business class and how do you get all the passengers that were, of course, you get that burst, but what's going to happen after 6 months? And really, most of these airlines make most of the money on business and first class seats and business travel. So that's what I would say there. It's just a continuation of the same trend we've been seeing. All right. So that's
fair enough.
And by the way, let's just take a look at where he thinks 5,000 in order to buy these puts here. Sorry, for April. Okay. Let's just kind of give you an idea of what he's got to be thinking here. So we're talking about 1920. Let's throw in 19, a little bit of edge. So $19, 1987, call it almost $20 is a risk reward break even. So 19 would get us, this thing would get us $3, 220 over 3. So it's probably about 335%, 319. Okay, off a little bit. 320% returns is what he's kind of I'm sorry, it's over here, 300%, 297. We did 18's too much. So it's right around 19. Yeah, it's right around 19 that we're looking at. Right around 19. That's how we get the pointer here. All right,
cool. Good. Nice.
Let's see here. What else did you see?
Why don't we take a look at Peloton?
Right, that was the other one I saw, the Peloton. So Peloton, I love to hate this stock, by the way. Love to hate this stock. This has been a pain in the behind for me. The Peloton is, and they sell bikes, exercise, and they sold a lot of them during the time where everybody was at home exercising. They bought out someone, I think it was somewhere around here. They made a big purchase because they had problems with delivery. Made a big purchase where they would be manufacturing the bikes, and that was going to do a lot for the business to get them to the court. This company also had ties with a lot of corporations and gyms in the corporate offices. So that was a big positive. Stock has reached 170, and since then has come down. Obviously, the reopening is right around, while AAL is going up, you're talking about the last 6 months, it's right around 1, 2, 3, 4, 5, 6. So let's call it somewhere around here. Talking about that's when things started really moving. This for whatever reason seems like the right level, 95, 100, right? You see that?
Yep.
And then we're just talking about, let's say this all the way up here. We're gonna box it. So we're really looking at this window here. Okay, these sort of quadrants. Forgetting this over here. This was a big move. Granted, they are selling more. It is people like the brand. They're buyers. The question is, how many bikes can they continually sell, and how often will they sell them? So you have this a little bit of what looks like maybe if it starts coming back down here again, you could have like a head and shoulders. You got the 50-day coming down, not so great. And then, the question always becomes, is it a fad, and is Nautilus like the cheaper version or Amazon? But are people just going to buy the brand bike for an extra $1,000 or not? Is it difficult? Is this the way I always think about these things? Is it something that is brand new and not a fad? Is it something that can it last like a Lululemon, where it becomes a life brand, including bikes and everything else, which then you need a higher valuation? Or is it just going to be this company where people are exercising at home and it's a bike, and eventually people get tired of doing it at home and they want people around them while they're working out, and it's a social gyms are very social, and so that whole story. So that's really what you're betting on there. But I would say that looking at the what the buying puts here, I saw here, so it's interesting because I have it. If we keep going with the frame here, if it breaks this and you got this move down from 170 to 95, which is $80. So 179, $75. So then 75, where does this stop? Where you can then say, okay, I'm going to do another $75 from wherever it stops. So if we take something like this, and if it goes back to 140 here, okay, and then a 75 off that gets you to 65. What does that mean over here somewhere? It kind of looks like where it took off, right? It kind of sort of coincides exactly to where this thing took off. This was positive, a little bit of a flag here, kind of like moving up like that, and then it took off here again. So it was like that. This is the same thing, another flag, type of thing, and then it took off. Let's erase this one over here. So you have sort of this pattern that's been moving up and down, and this seems like, again, all this stuff takes a little bit of imagination, but the premise is that what if it's not going to be this huge life brand? What if it's easy to copy and Apple comes out with their, they've come out their fitness stuff, and maybe they go hire 20 of Peloton's people and make them even more famous with an Apple branded thing that's free, or $1 or $2 for subscription. Peloton has subscription dollars. That's where they're making their money, and it's got to continue like a Lululemon. If it is a Lululemon, you could see how much is Lululemon worth. Let's see, Lulu stock. Lulu stock is worth $41 billion. So wow. Peloton lost a little bit here. It's probably 36. So you got to think about that. That's comparison. Lululemon's been around, has stood the test of time, went through crashes, and came back, and 36. It's close. Like, which one would you rather own? I'd have to look at it a little bit further, but just off the top of my head, I think Lululemon. But so that's how this is. We're starting to get into the framing and the development of the idea, because that's how you have to start thinking about it. Who are the competitors? How will they make money in the future? What is the story? The story is that they're going to be the next Lululemon plus all the athletics, all the athletic equipment and gym memberships and subscriptions and online subscriptions. And there's obviously a huge market, but at what cost of acquisition, and who the competitor is going to be in the future. It's not about right now. Right now, it's easy to say there's not many competitors, but it doesn't. I don't think it would take much if Peloton is making all their money because they're doing bicycle subscriptions. I'm not sure that it just attracts eyeballs. Apple would say you make $30 billion, you make $20 billion in revenue on bicycle subscriptions. We'll just take that. Like that's easily, it's an easy grab. How could it be a grab? Well, people go they're most of the time. If you go to, I've been to one, they're very, very difficult, these writing things, but if you really go for the instructor, so if somehow they can just go in there and sweep all the instructors, it could do some damage to the Peloton business, especially if the instructors leave and you go from whatever it is, $20 to $30 a month to $2 on Apple, and you have it on your iPad, and you have a machine that you can buy for $500 at Nautilus, and you get the same experience. Maybe that's how to look at it. So I'd have to dig deeper to sort of make that bigger comparison, but it's just the name that seems that the margins will be gettable, if you will. There'll be a grab for those margins when the time comes. So that's Peloton. I would say that they are buying. Let's take a look here. We're saying 65 over here. I don't think it's going to need to get to 65 in 3 weeks or 6 weeks. Yeah, but let's look at the May 100s. They're still buying them because they bought some more here because I saw them earlier today. So they're still buying these. They're paying up here, and they're paying. Let's just look here, $3. But yeah, they're buying these. You could just see that they're buying them. Vol's going up, and stock is also going up. But they are buying these on this large move up in the stock.
Okay.
And Peloton is hard to catch as far as the it always looks expensive. 70 vol. You're always trying to get, like, during the earnings months, they usually trade a lot higher. But it always looks fairly expensive. Like, you got to pay $3 with the stock at 122 over the next 6 weeks. You get the earnings. That means what? You got to think the stock is going to go to 85. You got to buy that. You got to think the stock's going to go to about 85, 80. That's a long way down, right? That's a long way down because you're buying this way out of the money option. Okay, so they're buying this for a crash, basically, in Peloton. It's something really, really negative happening. I'm not sure you get that, and maybe there's, I'd rather if it was a real short and they really thought it was going to go down to like $90. I think it's the machine is going to tell you a lot higher, which I would have said the 110s are probably better. You got to pay a little bit more, but the risk reward on a risk reward basis with $90 is going to point up a little bit higher. And if you say, well, I think it can only go to 100 or 95, and then you're starting to get to this where it's basically at that point saying, once it's up here, what this is basically trying to say to you is you should just try to short the stock as opposed to buy options, because the options are not priced well enough for you to jump in there. So that's what this is trying to say. So it's a comparison between actually trading stock, shorting stock, or actually buying the puts. So to buy these, either he's getting long and he just wants these to hold as a throwaway just in case, because this is going to look going higher. But considering the stock is looks like this, and considering that they don't like stocks that don't have great earnings and they're looking more for value these days, I would say that he actually thinks it's going to come back and could break this 100. And if it does, then all hell breaks loose because all these people are trapped. So that's my analysis there on the stock and how to think about it.
Let me show you something real quick.
Go ahead. Sure.
I'll share my screen, and okay, here it is. So, all right, you see it?
Yeah. Wow.
So there it is. Apple Fitness, world-class workouts, best trainers, $9 a month. You work out with your Apple Watch. You get your
sure
iPad. So there it is.
Everything. I mean, it's like I'm wondering. I mean, if you went back up for a second, all the way at the top. If you had a woman on the bike there, I mean, it would just be the same. You know what I mean? It's just fitness works well. By the way, fitness works well with health insurance. So, health insurance is the real play. Health insurance is the $1 trillion play for Apple. And that takes the stock up another $100 if they can do it, right? So the healthcare is the big play. So fitness fits perfectly. So they would do fitness for free because that would help them lower rates on they'll know exactly how long you're watching every day. They'll know if you're fit, if you're not. They will know everything about you, including how much you're walking, what your heart rate is. They'll be able to give you, if you're very athletic and you're 30 something years old, Apple's going to say insurance for you is cheap. You and your family, we see that we see the groceries you buy, we see your bills, we see that you shop at Whole Foods. They see everything. Same thing with Amazon too, but they see everything. And now they see you on the bike and they see you working out. There's no reason why that family should be spending the same dollar amount as another family. So Apple insurance, health insurance is, people talk about the car. Apple health insurance is a big deal too. Very big deal. Very big deal. So yeah, I mean, look, at the end of the day, that's what I think about. I think about, why can't Apple have the Apple bike? Forget it, Apple bike, and then all of a sudden it's game over. So
game over.
Look, I'm not sure about Peloton. I'm leaning. I don't like the long-term story. I'm not necessarily that much of a believer to pay the same amount as Lululemon, who, you just go stand outside of Lululemon on a Saturday afternoon. Maybe not now in New York, but I mean, one after the other, people just flying out, women flying out with bags and bags of stuff. It's probably past the fad stage where it's actually a lifetime brand. So anyway, that's my 2 cents. But I think it's good to start seeing and talking about these ideas and the story, and showing you how to actually look at it and do it. So that's it. Let's talk about. Let's jump right into one of these that has a story, which is, we've been talking about FUBO, and FUBO led us into DraftKings and led us into what? Online sports gambling, right?
Right.
And so when you have, you look at FUTU is another one, FUBO, it's stock's still weak. The market keeps going up. FUBO stocks is weak. I have no idea why. They keep on. There's some more calls today on the 24 line, 23 line. It looks like it actually looks like they might be getting out of some of these things, but the stock is not trading well here. And you could just, your eyes should just be able to, your eyes are probably most of the time what your initial thought is the best thought. And if I just flashed you this chart, you would say, man, that doesn't look so good. That doesn't look so good. And in fact, remember we talked about the movement down, sharp. It tries to bounce, and then when it starts hitting that level again, and it's just messing around there, it had its chance for the buyers to come in and take it up. That was the chance 2 weeks ago, and now it didn't even go up that much. It went up from 20 to 24. Not that much is a 100-round name. So it went up from 20 to 24, which is still 20%, but then just dropped right back. And now it's trading. And over the last couple of days, it's been this very similar volume. So, it's a methodical sale here. I'm not exactly sure what's going on. And somebody pointed out in the comments that Archegos, it may have been one of the Archegos names. That would make sense. And that would, once that's done, maybe you do get a sharp back to 28.30, and maybe that's why they're buying. I don't know. I'm just reading the tea leaves here, and this doesn't look very strong. It looks like a weak stock, and so I think when you see a weak stock, I see a weak stock. Everybody looks at that and says a weak stock. The professional shorts are saying, until you show me strength, I'm going to short you, right? Until you show me a buyer, I'm going to sell it. That's how it works, right? They see what we see. Right? It's not rocket science there. They see what we see and say, you know what? Throw 20,000 shares short here. The buyer doesn't step in, throw another 20. They're gonna test that level, and they are testing that level. If you see right there where the buyers came in 2 weeks ago, and they say, okay, buyers, where are you? Or was that just a short buyer that's no longer there? And say, oh, maybe it's clear skies. Sell it. Sell some more 2020. Sell another 20,000 shares, right? And they keep pushing it until the buyer steps in and says, no, we'll take it up. But if they're right, they're going to crack it down to 16.
Right.
You understand that? So that's the trading game. That's sort of like if you're trying to play the trading game, then that's something that's really interesting. So that's FUBO. FUBO led us to which one? DraftKings.
DraftKings,
right?
Yes.
So we look at DraftKings, and there's a lot of passionate people on these names, and that's fine.
Yeah.
I'm all about the passion. I'm all about loving your stock or hating a stock. That's what makes a market, and that's the beauty of this game. But ultimately, reality sets in, and the winner's gonna be one or the other, whoever was right on the assumptions. So when I look at DraftKings, I start thinking about the long-term story, and we've done this. This is actually not a bad chart. I don't think this is a bad chart, just yet. This is kind of moving higher. This is sort of moving higher. It's all sort of moving higher, which is, there's nothing wrong with this. I have the only thing I would say is, these two pullbacks here were pretty sharp, even though you could say this one came right back up, but came up. It's being rejected up at these levels. Okay. And the 50-day, it's now trading under the 50-day, and it was kind of holding. You see, when it trades under the 50-day, it has a little bit of trouble, right? Even though it pushed back here. But this 50 days kind of been a good marker for the stock, and it's under that. And then you have this sort of sharp move from 74 to 58. And this time, you see over here, they took it from 72 to 54. And what did they do? They immediately snapped it back to a new high. They took it down. They immediately snapped it back to a new high. They took it down. They didn't snap this back to a new high just yet. So something is a little bit off this time around, and it turned here on good news, right? You had really good news here as far as the headline news. New York allows online gaming. That's good news. There's nothing wrong with that. Stock was trading up ahead of the stock was trading up ahead of that in the afternoon, and then ahead of the morning open. And so and then just sold off for the rest of the day, and it's been weak pretty much ever since. This is starting to look weak after that type of announcement. Now, why would it look weak? Maybe people are putting a pen to paper and saying, let's go through those numbers again. Can we rifle through what our assumptions are? And that's where the story happens. That's where, if we're gonna go the other way and say, okay, we're gonna frame. We know where people were coming in. They were buying the 55 puts right around, let's call it here. They were buying the 55 puts, and they were selling the 70 calls. Okay, that's what they were doing. So let's just keep that in mind, so we know what the big boys were doing, where they were coming out. That's what we're identifying. Let's just put it out there. This is what they were saying. They were saying 55 to right around 70. Okay, and they did it in decent size, which meant it was someone who had a lot of stock. Now, that's our sort of frame right here where we're looking at. And now we have to decide, do we believe the story or not? Because ultimately we have this idea, but we want to dig into the idea. We're looking at DraftKings. We see this big trade. They're only in May, and then you don't really get the earnings in DraftKings in May. So what are we thinking about here? Where could it go? And why could it get to a certain point? So I wanted to, when we talk about these stocks, we throw out very large numbers. So let me see if I could, let me share my screen. I have here a Excel. Okay. Yep. So I just did something quickly. This is very rough. It's very, it is something where we will, let's see if I can, should I do the whole screen? Is that easier for,
I think
is
it's
that
good.
fine?
Yeah.
Is that fine?
It's fine.
Okay.
It's fine.
So, I'll put it maybe in the middle here. How do I do this?
You're good. We can see it. Don't worry.
You can see it okay?
Yeah.
All right.
Yeah.
So what I did here was I basically said, all right, let's talk about billions of dollars. Okay. And, there's a couple of things, a couple of terms that everyone needs to understand in DraftKings. So just do this. And remember, this is just me throwing out numbers just to figure things out and framing it. But there's a couple of main points that we can talk about and we need to know. First is what's called the hold. Okay. In the hold, that's the total dollar amount that's being gambled. Okay, the total dollar amount. So if I like the Yankees tonight, I want to bet $100 on the Yankees, I would bet $100. That goes into the hold. That's how much into the handle. That's how much is being gambled. Okay, that doesn't mean DraftKings, if I use DraftKings, that they make $100 if I lose. They make that bet. What they make is the VIG, which is the difference between what the win is, $100 for me, but if I lose, I gotta actually pay $110. Okay, so the VIG is $10. $10 on 100, and 100 is basically you actually take the two. Only the loser pays. So you take 100 plus 100, it's 200 divided 10 divided into 200 is 5%. So in general, the hold is about 5%. Let's see if that pops up like that. Okay, right. The handle, we don't know what the handle is in billions of dollars. We don't know. So we could throw in whatever number we want, and that would give us the hold. So if the total amount wagered was $100 billion and we have a 5% hold rate or win rate, they also call this /revenue. Okay. Okay. It'd be $5 billion. Okay. That's revenues, total revenue. So this handle, this 100 billion, they call it TAM, which is total addressable market. It's basically saying, or they can call this one, total addressable market, right? A lot of people confuse this, but when the analysts speak about it, they talk about the total addressable market for the companies. So it's not this one, it's this one here. So these politicians, and when they're talking through these things, they always confuse. They can confuse how much is actually gambled and how much is actually going to be in revenues. Okay, because it's a bookmaking type of product, this number doesn't change that much. It's always 100. Pay 100, win 100, lose 110. It's always going to be around there. In fact, there's already sites, you can Google them. It says compare all the different sites, and it's going to show you everybody's got to be around the same, right? It's like just like it's in stocks. Apple's trading. What is Apple trading? 130. So if everybody's buying or selling Apple around 130, 130.10, say that's the bid offer, and you have it at 131 where they can buy it, how many people are going to buy it at 131 from you? Even though you might have the best app to trade stocks and whatnot, people are just going to say, I don't want to pay 131. I just want to pay 130. Okay, so it's very commoditized, and it is something that we really have to focus on as we do this analysis, because the end product is somewhat a commodity. Okay, at the end of the day, it is a commodity. It's bookmaking that's been around for 50 years, and the margin's always about 5%. And you can't, to get, how do you get bigger margins? How do you get bigger margins? Well, you could get bigger margins if you do what they call in gambling, called these parlays, right? Where you got to win three in a row and you win a much bigger amount, or you got to win 10 out of 10, and you can, a $10 bet can make $700, right? So these are parlays. In parlays, your VIG, that 5%, could be as much as 20%. But those are called suckers bets. And over time, people realize you don't do those bets, right? You'd rather just bet on the game straight. But people still do them. It's like a $2 yo. It's called a suckers bet. Okay, but this could become 7%, and in some months it's more, a little bit less. It depends. Okay, but it's about, let's call it, I'll give it 7%. Now, here are the guesses. Everything in yellow up here is the guesses. So the question is, what is the total addressable market for the gaming, the online sports industry over the next 4 years, 10 years, 2025, 2030? This number ranges. It says it's 30 for some people, it's 40 for other people. Okay, ARK has it at 180. Okay, over the 2025. So that's the fantasy number. That is what is the fantasy here. What is going on in this particular industry. Okay, you could stick that number, whatever you think that is. Let's just stick to 100. Okay, 100. We don't know what date. You can figure out what date it is. Then you have to figure out, okay, here's the total addressable market. What percentage of the market will DraftKings have? 25% is really high. It's really high, right? Because you have so many, just to give an example, New Jersey, which is a competitive market, there's 17 apps that people can use to actually gamble. Wow. 17 available apps. I think our DraftKings has 20%, maybe around 20, I think 17 to 20%. I forget the exact number, but let's call it 25% across the United States. And by the way, this is just a US number. This is just a US number. So 25%. So they're going to get 25% of the revenues when it's all done. Okay. Then you get this number, net income margins, right? So net income margins, would be amazing at 20%, right? In reality, 15% would be pretty damn good. Okay, so now you're knocking this number down from total addressable market to what percentage they own to how much they would make. Again, these are guesses. I'm just throwing numbers in there, and everybody can do it for themselves. Once you get to $100 billion in total take, right, in total addressable market, the market is, to some extent, could be starting to get mature, right? You're bumping up against, the amount that's actually, trading. So if you had, for example, betting on games, 100% hold, right? I just did it backwards. If there was 100% $100 billion in revenues up for grabs, that means the amount traded, or the amount gambled in sports, would have to be $1.428 billion, $1 trillion, $1.43 trillion, which is a huge number, right? And so when you look at that, when you look at this, what we're doing here, you're basically starting to put in these guesses. Now, to get to this percentage, once you put this guess of 15%, you'd have to say, well, how did you get that number, Felix? Well, that's just a general 10% for bookmaking companies is good. 15%, I'll give them positive. 20% is just like out of this world. Okay. But you'd have to dig in on marketing spend. How much are they spending in marketing? And the bull story lies a little bit in here. They think they can get it. Why can't they get it to 20% net income, right? Because that's the bull story. The bull story is, once you got the guy, we don't need to market so much. And so our marketing spend is going to go down. Okay, so now you're thinking like the CEO, like a PE guy, and saying, okay, do I want to invest in this company? Do I want to buy DraftKings? That's really the question. Do we want to buy not just the shares? Do we want to buy the whole company? Is it worth buying the company? And so 25 P is something at maturity. I'm giving it a decent size price earnings. This is P. So once the business is this strong, what's the P going to be? Let's call it in 9 years. What's the P? They're going to start producing earnings. They're producing $5 billion earnings. What's the P? Say 25. Okay, so 25 times 5 gets me $125 stock. That's big, right? Stock's trading, call it 60 something dollars right now, 62 bucks. Okay, that's a double. Okay, that's a double. Still, you're talking about 9 years. It depends on how long you're to get to this 100 billion. Double doesn't seem so exciting holding this type of stock with this type of risk that I'm going to show you in 9 years. So now you say, okay, well, what about price to sales? Right now they trade about 25 times sales, but that's because people are thinking about the growth in the future. So they're willing to give this 25 times sales. When in fact it gets to sort of this mature industry, you're not going to, it's hard to imagine you're going to start getting more than $1.4 trillion in online sports betting within 9 years. That by itself is difficult. But once it starts getting up there, price to sales is no longer 25, which would have the stock at 625. Price to sale comes down to sort of on a mature business. In gaming, it's been about FanDuel, I think is about 4 or 5, and they're giving it some growth there. So you have, let's call it 3. Now you have a $75 stock. Okay, stock is 62. We're talking about years from now. So you can play around with these numbers, and you could start seeing how you get to certain levels, and you start seeing the news, because we talked about the news. Now we have ARK's number in 2025. So ARK says the total take is going to be 180 billion. Okay. And I just think it's too high. I actually think I just think it's too high. They have DraftKings probably getting $18 billion from this, so call it 10%. So it's a lot. And I would just start thinking about, what's really what the fantasy is saying. So these are all the different things that you could start pumping in there and figuring out where you think the numbers lie or where they fall. Obviously, the bigger this number, I mean, if you're going to 2030, then, why not 300? And then you got a, $375. If you got 15%, income, is that right? 15. Yep. Then you got a 280. That's how they're coming up with these, buy it here at 60 and you can make 3-4 times your money in 10 years. So they're not crazy to think that it's just that's how you're doing the math. It's not rocket science. It's simply building something like this and playing around with what could happen. Okay. All I'm trying to say is, trying to get to $180 billion handle in 4 years, I think is hard, considering that February 2021, I think is the first time there's $3 billion in online sports gambling. You're also, by the way, competing against, when you bet online, you got to pay taxes. There's a lot of people that are betting outside of this and don't need to declare anything. They win a bet. They don't have here. You start winning bets, the government's going to come after you for taxes. By the way, the other thing about net income here, when you're talking about the New York, right? This is fine. This has nothing to do with sort of New York. But what happens is here, the net income goes down. They could take it out of this as well. But New York is basically saying, we're going to take 50%. So what does that do? So you talk about, $10 billion trade in New York, and say there's a lot of parlays. Let's call it $1 billion up for grabs. Then you got $500 million is just taken by New York State. So you only made $500 million on $10 billion out of New York. Now they say New Jersey, $6 billion. So again, all I'm trying to do is saying a simple thing like this on Excel can have you start thinking about what a company is worth. What does the fantasy stock have priced in? What does Cathie Wood really think? How does she get there? Now, this only takes into account sports betting. Part of the story is also fantasy sports betting, which is a decent sized market, and the other is iGaming, just regular slots and whatnot that they'll have like a casino. So you have to give some credit to that. So this is just, let's call it, this would be 60-70% of the story. What's the other 40%? But either way, the margins, the reality is that maybe they're only 20 at best, and maybe net income is somewhere around 15, and then you have yourself a, at 100, and let's call it 150. Let's go to 100. What does that do to it? You start seeing that you're already here with $100 billion. You're already here, right? And that's 60%, because the other parts are maybe 30-40% of the DraftKings, what will be their business. Esports is in there as well. It still seems a little bit frothy. I don't think it's going back to 20, but could it get to 40? I don't see why not. I don't see, if you start looking at that and you get one blip, and the thinking, the reason why I was saying about New York, the thinking is that if New York is taking 50 and New York's a big state, every other state's going to say, why wouldn't I take 50? Like, why? I want 52. And what is DraftKings going to say? No, we're not going to do it. Somebody will jump right in there and do it. And then, by the way, if we talked about Peloton and margins, remember, if you don't have anything that someone can't copy or someone can't do, then the margins, keeping those margins is huge. If DraftKings, for whatever reason, starts making $20 billion, sports betting and a sports book, not the fantasy sports, it's going to be hard for Amazon to just turn around and say, I want to start doing fantasy. I don't think they want to do that, but if it's just sports betting, and there's billions of dollars at stake, and there's millions of people on the app, and it's transactional, and Amazon gets to see what you're doing, how many times you're gambling on a game or betting on a game, where you're going, if you're at a ballpark, are you watching a game? Because Amazon, by the way, also has Major League Baseball, and they keep buying those licenses to try to show those games. You get into the FUBO story, you get into the DraftKings. We're dealing with ultimately a product that is a small margin business. And if you think that these companies are going to get rich off that, I'm not sure that that's the case. Fantasy sports, I can, they've done a great job, and that's going to grow, and that's a good business. I don't think other people want to get into that business, but sports, if sports bookmaking, it's a commodity. It's been around for 5 decades. There's no difference. You got 17 apps in New Jersey. You think, it's going to be like anything else. You can white label it, and that's it. The barriers to entry was regulation, right? That was the barriers to entry, which meant that if you wanted to do a sports book, you had to go to Las Vegas. And if you had to go to Las Vegas, you had to, muscle your way in through the Bellagio, Wynn, and Las Vegas Sands, and billions of dollars in a 3-mile radius. Yep. It's hard to get in there. That was, so the barriers to entry was, the minute regulation opens up and anybody can do it, you're going to have 1 million apps. You have 17 in Jersey. When every state has it, you're going to have 500 apps that are willing to actually put up their sports book, because it's all the same. So the point is, everybody can think for themselves. Everybody, the idea is to help people to think for themselves. You don't need Felix. My opinion is just my opinion. This is a simple spreadsheet that you could build. Okay. And these are simple formulas. I'll just go through real quickly. So it'll be, it's this times this gets you that. Net income is this percentage times this 20. Okay. PE is just simply 25 times 3. That's that would be your price and your market cap. And then PS is 3 times sales right here, 20. Okay. D7. That's all it is. And this is just a circular thing to, if you're looking at this, right? If you're looking at the hold and you can plug in 7%, 7% is pretty high, but you do a hold and 7%, you're going to get this handle. And if you want to look at the percentage margin and the handle, you're going to get the total addressable market. So play around. You could just play around with these numbers, start thinking for yourself, what could happen? How can this, how could this be affected? You start thinking about, well, how do you get percentage of the market? Well, just go look how much FanDuel has. It's all stats that are out there. How about net income? Why net income 15%? That's part of the bull story. Start looking at market spend. Right now, these guys are losing money hand over fist because they're saying they're trying to get the customer in the door, but they're thinking once they get the customer in the door, that the customer is not going to go away. I'm not sure I buy that. I'm not sure I believe that. Sports gamblers are just looking for the best. Like in stocks, you're looking for the best offer on the stock. Okay. So I would look into the net income and what goes into that, which is a lot of marketing spend and technology. And then these are just take a look at mature companies and just look for yourself. PEs 20 to 25 for mature businesses and low margin businesses, and price to sales in a mature business. Look at FanDuel. FanDuel's been around a while in Europe. And by the way, this is only US, so you got international too, but DraftKings has got to do well in the US first before sort of thinking about international. So that's your puzzle. And again, this might only be, let's call it 60% of the answer, because then you got to look at iGame and this. So I'm not saying that these numbers are exact, but I'm simply saying that a lot of it is already priced in, and a lot of it comes off of this number right here.
Right.
Okay. So all of this is something that people should, do for themselves. And again, I just wanted to take 15, 20 minutes because I think it's important. You have passionate people on both sides of the fence. People think this is going to go down to $35, $40, and then there's people that think it's going to 200.
Yeah. Right.
Pick your poison. All right. Good. Let's get back to business.
That was brilliant. Thank you. That was awesome.
All right. Good. Quick one. But go ahead. What else we got?
We got a couple interesting from the audience here. If you want to take a look.
Sure. Go ahead.
So ARKG, I believe. Is that the same as ARK Investment, right?
ARK Investment is a holding company, so they have a bunch of different. They have like Space is ARKX.
You can also share your tools.
My screen. Yeah, my screen. So ARKG, Genomic Revolution.
Yes, and there's some put buying in July.
I was gonna say here's I always say your first guess on whether this looks bullish or bearish is probably a good guess. It's probably the best guess, right? If I just opening this, it almost looks like a lot of these other stocks that they've had a long run. This is a big level. I got this right here. Okay, seems like a big level right around here. You see 78.
Yep.
Okay, that seems like a decent level. This also right here seems like a decent level. But what I'm looking at here is it came up here 115. This right here, I mean, it's pretty clear what it's doing once I just outline it. But you should everybody thinks for themselves. Just takes a little bit of practice. This is sort of what I see here, and this is not typically a good chart. The MACD is also coming back down. Remember the difference? See the difference in MACD from the 50 and the 200, 50 and the 200. All of a sudden it starts exploding, right? You see that difference?
Right.
This is the widest it's been right here. I'm gonna take that off so it doesn't mess it. And now that 50 days come down. So this might see, I can see a whole lot of nothing over the next, call it 3-4 months. And a whole lot of nothing for this could be sort of like 110 to 70, because this is a volatile, genomics is in biotechs and they're volatile names. But I actually think that you have a lot of money coming in. A lot of it is probably ARK. And this, what you're looking at is 115 to 77.5. So that's 22.5 is 37.5. Okay, so 37.5. Is that right? No, 32.5. No, 37.5. Sorry, 37.5 less. Where are these points gonna? Probably right around here in the middle. So 37.5 less 88 gets you how much? Almost $50.
50, yeah.
Right. So what does 50 do? So I just want to see where would 50 be, and if it has any. A little bit, sort of this right here, 1, 2, maybe it's more up like here, 52.5. This, what I'm simply doing is moving this to here. So just push it right here. You see that?
Yep.
Right. So I'm moving this here. That's on the downside. On the upside, it's got to recapture this, and you want to see it recapture the 50-day. So 50-day comes down, so I could see it would turn bullish if you basically, and you got the MACD coming down over here. You see how the MACD is climbing? It's climbing pretty quickly here, and the market's not really moving. So once this MACD, it's ebbs and flows. So down, it looks like it's climbing. Try to go down here, climbing, but when it gets here, if it starts going this way, then obviously it's bullish, but usually it goes down, hangs out. It's in a different frame. You see, this is the lower half versus the higher
Right.
half. So it's having a little bit of trouble. But I suspect that we will break this 77.5. And that this isn't really what's going to hold. I think once it breaks 82.5, I think that's when you could see it start moving towards this range. And some of these, to be honest, they don't take that long. Once it breaks, it's it's the floodgates, right? It's all these people that are long here. There's a lot of look at the volume. Look at the volume here to the highs, right? Everybody is long. Just so you could see it. See, no volume, no volume, no volume, no volume. Oh my God, have you guys seen this ARKG? It's amazing. I'm making so much money. And then everybody comes in to buy it and they take it up. And now they've taken up from 75 to 115. But there's a lot of stuck people. Now the stock's 88. It was from here on this gap right here. Everybody here is stuck. Is down money here. Anybody who bought it here. And now it's sort of waddling around this level underneath here. And, you get another batch of sellers, and that's how you get it down to sort of this batch, right? The market's going to want this batch because this is the last group over here. So that's how I think about it. I'm looking at volume, looking at the chart, looking at the MACD, looking at the 50-day moving average. If you want me to look at options, if there's something there today, I can take a look, but
yeah.
There we go. July. Do we see anything? It's probably way out. Let me see.
Still loading. Yeah.
Oh, it is?
Yeah. Maybe try to reload it.
Let's see here. Oh, here we go. Oh, there you go. So they're buying these. Are they buying these? Take a look. 10,545. 46.8. It's interesting. They just bought 10,000 like it was nothing.
Right.
10,000 in one shot here. So it looks like somebody put them up. There was a bank. The only person who could do that is a bank. So someone put it up and stock traded into that negatively and then bounced a little bit and then continued the trend. So it looks to me like a buy. And I mean, here's the window of opportunity. This is where they're buying. So that also gives us a clue. The 82.21, so 69.65. Got to go lower. So we're talking about 63.64. So 63.64 and gets us, lo and behold, look at that. Right there. See how that works? So, yep. I mean, this break, if this breaks here, it's just looking like a mountain, right? It's like climb and then gets back right to where it started. The volume, follow the volume. Does that make sense?
Yes.
Okay. All right. So that was a good one. I mean, I didn't know where it was, but this is how you have to look at it. This is where they think it's going. They probably think it's going there because maybe they were buyers. Maybe the person who's buying this thinks that maybe they were long it and they're trying to sell it and they're concerned that if it breaks here, it goes right there and they want to make some money if it does. I don't know. I don't know who owns it, but I'd have to look deeper into that as well. But it looks like more that this is on its way down in general, and it's going to need a lot to get it back up, and everybody's stuffed in it already. You see how the volume, you can look at that. Nothing. Everybody gets stuffed right here. Puts all their money, all their money goes in right around here, and now the money's in, and there's no out. How does everybody get out?
Right, that's the question.
You see what happens. Big selling. Just 3 days, 4 days, and look how this thing pushed it down so much. And now, by the way, there's buyers coming in here because it's cheap again. Oh, I can buy it more. So there's a lot going on here, but I suspect that these are the pockets that they're looking for.
Okay,
is that fair?
Yeah, good. That was actually one of the questions from the audience.
Good.
What happens when these people want to get out of these stocks that they're stuck in?
Yeah, that is the problem, right? That is the problem. These things, we've always said it, that the problem is not. I don't have a problem with her analysis. To be honest, everybody has their own opinion, and who's to say I'm right at all ever, and but she has an opinion, and she thinks a lot of these things over 5 years is going to go up. But at the end of the day, the market's going to have its own opinion, and that's what that's how you get marked. So she has done well in Tesla and was very vocal about it. And you got to give anybody that vocal about something and being right, you got to give them some credit, and that's fine. But at the end of the day, that attracted all this money. You see this, all this, there was nothing in these names. There was nothing in it. But this is messing around. This is like she's buying and selling. And then all of a sudden she becomes famous as this genius, essentially, because she picked Tesla and how much it exploded. And remember, people are making money here. They've doubled, and it's genomics, and genomics is another 10-year trade, 20-year trade, and ultimately it cures cancer. And how much is that worth? I mean, you can go on, your imagination can run wild, but at the end of the day, you get marked by the market. And until that happens, right now there is no way out on half of the. I would bet her top 10 names in this ARK Genomic, they're probably really tough to get out. She probably owns close to 10% on a lot of them, because it's just so much money. All this millions and millions of shares times $100. You're talking about billions of dollars going into this. So you can look at the asset management. You could say assets under management of ARKG and see how big this is. And these are baby stocks. Usually the genomic stocks. They're usually like small biotech companies. So it's a problem with all of her names, right? She's getting to the point where her new ETFs are holding her other ETFs. It's like you can't even make it up, right? Because it's if everybody's holding the next batch, I mean, I don't know. How do you get out if the market does turn? How do you get out? So that's something that I would consider. Yes.
Okay. Cool. Nice. Couple stocks we can go into. You can pick one if you want. We have one we prepared, GSX, that I saw, and then there was one from the audience, BlackRock.
BlackRock.
I've seen some call buying in BlackRock. Yeah, EEM, right?
BlackRock. Yeah.
But it was EEM. EEM was the symbol.
Oh, EEM. I thought it was BlackRock. BlackRock was good.
It also says BlackRock here.
EEM. Okay, so EEM, emerging markets. This is EEM. So.
Oh, sorry.
Yeah. No, it's okay. I think BlackRock it's probably iShares. Okay, so EEM. Just to frame it here a little bit. I mean, this is kind of what I see. I see a gap here right at 50.51. This thing is, let's call it 58-ish. And we have something right around here, gappy, somewhere around, I'm going to say here, let's just call it somewhere around 45. And this is the start. Okay. This is normal. EEM, I would say the 50-day pointing down, same thing. I mean, it all looks like a little bit toppy. The whole market's in a bull market. I mean, if this thing trades back to 58, EEM, the one thing that I would look at is, so we have this 58, 51, 46. Let's look at, if the dollar starts going higher, that usually hurts EEM. I don't know if the dollar's going higher, but that's something I would look at here. So you see this move right here sort of coincides with the down move in EEM. So dollar going up, usually emerging markets are going to come off a little bit here, and then you have a pullback here. So tell me what happens with the dollar, and I'll tell you what's happening to EM. So if the dollar, everybody's been waiting for this dollar to come back. Maybe it does, maybe it doesn't. There's a lot of people obviously with the printing saying dollar is going to zero. I would say this is a tough call. This is a big macro call, and everyone is short the dollar. It's a big short, and essentially you buy something, you short the dollar. So if you buy Apple stock, you actually short the dollar. If you buy, so it's just assets. Assets a bid. Everybody's short. So at the end of the day, this will be a big denominator for the emerging markets. And then what do we have in EEM?
We have August.
And EEM, and then when you go through, when you think about who's in EEM, when you think about what countries and what they're producing, it has a lot to do with commodities too. So and exports. So
Look at August actually, not May.
August.
It said BlackRock up there. That's why it confused me a little bit.
Oh yeah, don't worry. Yeah. Sometimes from the service that I get it, sometimes even the spies is a little bit off. Okay, so it looks like I immediately see the 8,000 versus 5,000. So it looks like 23.2, 5,000 at 108, 23.2 vol, and 8,000 at 56, 23, 18. Okay, so it looks to me like just from that spread and the way it traded, because otherwise you can't really tell. It looks to me that someone may have bought the puts and sold the calls. I'd go check a little bit further on this, but it looks to me like that's usually what they're doing in this type of trade. And if the 49.56 level, which we had it, let's see, EEM, 49.56. So right around here and 49 right around here. So they're looking for, let's assume, we're going to assume that that's a 49. Okay, so they picked that initial resistance. It shot up. That was initial resistance right there. Turned out to be a little bit of a dance over here, right? And then it took off. So they're looking at a break of 49. Okay, this level. Now, if I look at sort of this type of pattern, this up here, and then bring this. Let's see here. Shows an easier way to do that. Somebody could show me. But essentially bring this down here. So call it from 54 to about 47. So if it does break this 49, you could see it trade down, say to like 47, 46 even. Remember we talked about this line, 46. So yeah, I mean, it's kind of going to sort of we had it 58, 51, about 46, I think, 45, 46 even. Let's call it 45, 46. So we had it 58. We had 51. We had 45. So if I took away this, and then we're doing this 1, 2, 3 down, ABC. So now you got 54 to 48, and then it's got to break this. Yeah, I mean, you're going right to the 50-day moving average, breaking this right here, this low, will push it down here. Maybe if it goes hard, you can even see 45. So, that's how I'd be looking at it. That's what they're nervous about. Okay, so to be an unwind of this, this is a big move. Let's one other thing. When you have something this straight, you can just easily do the Fibonacci retracement because it's so straight. You just pull that up and pull it over to 58, and you see that the 50 gets us to around here. The 38 gets us to 47. So it can drop. It can, just on a Fibonacci level, it could actually. You see how much room it could drop.
Right, I see.
Just move from here to here. So, I mean, yeah, they're positioning themselves for, maybe they're getting out, but in the process of getting out, because they have so many shares, that maybe they trigger something, or, but 10,000, a million, this trade's 25,000. It looks to me like they're setting up for, they'd be willing to let go of stock up at 56. So that in order to do that, maybe they are selling. You can look at BlackRock Holdings. Actually, BlackRock might be holding a lot of these, but you look at them and see how much they're holding, and they probably got 30, 40 million of these shares.
Right.
Okay. So, and they're buying, a lot of these guys are buying over here, right? So it's always, they're buying the dip because they're 10-year holders. Then it goes up from literally 30 to 60, and now they're trying to get out of some. And that's just the game they're playing. So they had the money and the 10-year horizon to buy all of this over here. They start here, they're buying everything in sight, and then they just literally, they sit on it, and it's a year later now, and now they're 60, and now they're getting out.
I see. Nice.
Okay. Good. Last
Awesome.
question. That's it. I think that's good. 207. All right. That's good.
That was a great session.
Listen, have a great weekend, man.
Thanks. You too. And
All right,
thanks
make sure they
everybody.
like. Make sure they like.
Guys, please like, subscribe if you haven't, and have a great weekend. Thanks.
Be good.